how to make money on Bitcoin's next move. This is what I will cover in this update, so let's get into it. But before we do, let's quickly cover Bitcoin's price action. So what's happening right here? If you remember in our last update, I did not really want price to lose the low of this candle. If it did, I said that I had reasons to expect much lower prices. On top of that, after this drop, what we had below price was an untapped quarterly pivot, and those usually tend to get tapped before you see a reversal. But also, if you go on the CME chart, what you will see is that Bitcoin actually got acceptance back into the CME gap, as you can see. So the top of the gap was right there at around 66,400 and the low of the gap was at 64,000. And usually also when you get acceptance back into the gap, those tend to get filled again before you see a reversal. However, upon seeing all of this, I did actually switch my stance from bearish to neutral, and this is what I will explain in this update. So, what I want you to do in order to make money on the next move and in trading in general is first, as you all know, build your own trading plan. You must have a trading plan. If you're following someone else's plan or you're following no plan, you're building very bad trading habits. And if you're looking to become a profitable trader, you must stop doing this. But what I want to talk about in this update is that you must always try to put yourself in the shoes of a market maker. What do I mean by that? Well, as most of you know, a market maker is one that provides liquidity to the market. And usually, those are the people that manipulate price and control the market. And what they will do most of the time is that they will try to wreck the most amount of people before you see moves in the market. It's unfortunate, but that's the nature of markets. If some people are making money, the rest will lose money. And especially on this consolidation, since after this consolidation we do have a move to new all-time highs, what they will try to do is get the most amount of people as fearful as possible in order to leave them on the sidelines, and then you will have the move to new all-time highs. This will create a lot of FOMO, a lot of buying near the highs, and then after you will have another dump. And that's exactly what I saw during this consolidation. So as I sent on the Discord, because we had two levels below us that thousands of traders were watching, so we had the pivot point and the low of the CME gap, what I said is that a reversal here would leave everyone waiting on the sidelines. On top of that, we did also have proof to show this because the funding rates were actually neutral or even negative on all exchanges except on one, on DYXD as you can see. But the funding rates have not been this low in weeks. So what this showed you is that overall traders were either scared too long or they were waiting for lower prices. And that's why when you put yourself in the shoes of a market maker, a reversal right here would make sense because it would leave a lot of people on the sidelines. Again, as the funding was low, this showed you that people were not willing to open longs. And that's why overall, always try to put yourself in the shoes of a market maker. This will help you understand the market much better, but also predict moves that are to come. But I'm not saying that this is the absolute low. Of course, we could see another move down before seeing a reversal. But what I wanted to talk about is that when you get into this mindset, it will help you a lot during your trading. And of course, you won't get this mindset after watching one course or multiple videos or 1 week of training. This comes with time when you understand an asset more, when you understand the nature of moves in the market. Overall, this will help you a lot. I'll give you one more example. Let's say that, for example, this is not the absolute low. After this rise, we have another leg down and then a reversal. If you see that after this move down, a lot of people are waiting for a break of 60,000 and overall the funding rates even flip bullish, a very possible scenario is that you have a drop and you take this low for example. However, you front run 60k and then you get a reversal. So just as you had here, what happened here again? A lot of people after this drop were waiting for a break of 60,000 and they wanted price to take the low of this wick, and this is why you had a reversal just above 60,000. So overall, that's what I wanted to talk about in this update. Try to put yourself in the shoes of a market maker. And right now, if you're feeling FOMO after seeing this move up, you're scared that you're not in the market, if you open a position right here, again, you're building very bad trading habits and you're setting yourself up for failure. So again, build a plan, find trading levels, understand the market, understand when traders are scared and are not eager to open longs, and this is where you will get the best trade setups. So this was mostly it for this update. It was more of a mindset update, as I said. I'm not gonna give you a lot of trading levels and different scenarios because I always want to push you to find your own levels and to build your own trading scenarios. And as always, if you have any questions, I'm available inside the Discord. So good luck traders and see you soon.